Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday Market Moves, what happened last week in the markets, and what we expect for next week. And thank you for allowing me to do work that I find meaningful. Thank you for giving me the most valuable commodity you have, your attention. I promise to do my very best to give you a return on it. Alrighty, let's go to the charts. Starting out as always with the S&P 500. Still climbing into the clouds, and why wouldn't it? The sky is still blue. As long as we're obeying this 10 and 20 moving average, it's still going higher. Basically, once we get a weekly close, so if we have one of these daily candles with a reversal bar going down, then it's likely that that we're going to have a correction. My guess is somewhere on the order of 10 to 15%. But you know, we shall see. Until then, it's going higher. The dollar is up about 1%. We had this super reversal bar 2 weeks ago, and it's just shot up, went through the 200-day moving average, and now we're touching on the door here of the 400-day moving average. I don't expect this is a big level of resistance for the dollar, but right up here around 105, it is. And then once you get into the 106s, we got a lot of resistance up here. So our short-term bias is to continue going to the upside, but we're going to be knocking on the door of some resistance pretty soon here. Yields, the Fed had their meeting. Okay, you guys might want to sit down for this. Shocking results. 98% of traders were correct, and they kept rates right where they are. So shocking. If we go here to what our favorite tool, the CME tool, has forecast for their next meeting in about, I don't know, 5 weeks or so in May, almost 90, 87, 88% believe that they will continue to keep rates right where they are, and about 12% think that's going to be the first cut. The majority think that the cut is going to happen in June. So that's probably when the cuts are going to happen. Although the market has been wrong for a while, we'll see how that works out. So 2-year yields, they're down from about 4.75 down to around 4.5, 4.6. 10-year yields, same kind of thing. They were up at 4.3. Now they're down around 4.2. And this is the one that matters, is the 10-year yield minus the 2-year yield. Seems to be following this little path that we drew a while ago, and we're still in clown world, although getting closer and closer to that zero line. And once we move above, this is typically when the recession happens. And still got to point out, as always, that the 1-month Treasury is still paying north of 5%, a great place, risk-free, to store your cash and wait for the crash. I just came up with that. Pretty clever, huh? All right, TLT. We are bouncing right along the 200 daily. So just tapped on it right here. We need to have some consistent closes above this 200-day moving average. And we expect once we exit clown world, this bet should do quite well. Time will tell. Gold, pretty much flat for the week. Excuse me, although volatile right after the meeting, it shot up, made a new all-time high. I believe the official number was 22.25, and closed the week at 21.60. So starting to roll over. If we kind of look at the weekly here, see, we're still pretty high on the weekly too. We have this pretty nasty bearish reversal bar here in the weekly. So when you get a candle like that or a bar like that, bias is definitely towards the downside for gold. This is gold divided by the S&P 500, and still S&P is outperforming gold by a long shot, and you can see because it's moving down right here. But we believe over the long term, it's going to form a pattern kind of like that. And once it gets back up to here, we can trade some of our gold for the S&P 500 and reverse the process. But that is a multi-year process. We got a long way to go. We need gold to outperform the S&P 500. So either the S&P has to go down and gold go up, or, you know, the S&P go flat and gold go up, or you guys get the idea. All right, GLD, we ran a put on this one, probably a little bit too soon. Would have been great to catch this after the Fed meeting. And I think we could have, you know, after the Fed had their meeting and gold shot up, I was talking with Daniel and Eric, my trading partners, and, you know, there was a forecast of this back here when gold had its triple bottom at 1615. This is GLD. Let me go to gold here. So gold had this triple bottom here at 1615. And right around here, us and a lot of other people said, okay, that was the bottom. That was the cheapest that gold is going to get. And now it's off to the races. And so far that's been correct. And the reason it did a triple bottom right here and then started going up is gold sniffs this stuff out before most other markets. And what happened here was the Fed was raising rates, but they were consistently raising at 75 basis points. They were raising at 0.75% every meeting. And right here, on this one right here, November 3rd, instead of raising another 75 basis points, they only raised 50 basis points. So gold sniffed out that, you know, the rate increases were not at quite the accelerated rate, and that was the bottom. I think we have a similar thing here, and that gold is sniffing out is that the Fed is almost done, and that's why it shot up for a hot minute. So I think our put was slightly early. Really wishing we had taken this one out to like July instead of June. We'll see how this works out. Bet's still on, but we do see more downside for gold. Hopefully this put works out. With the dollar going up, gold should go down. And not only that, but gold is pretty overbought. I mean, look at the indicators here. RSI, MACD, stochastic are all really high. This is the time when it usually rolls over. And we can see too, when this purple line right here goes below the yellow, generally speaking, you know, it's kind of a momentum indicator, you know, directional. And it does look like it's going to go down. So we'll see. GDX. All right. It is up about 0.8, essentially flat. Above the 200-day moving average. So that looks good. GDXJ. Above the 200-day moving average, that's good. Kind of, I mean, some bullish signs here. We have the 20 moving above the 50. 50 starting to roll up a little bit. It looks like the 200 is just about starting to like angle up, which would be bullish. But again, look at the technicals down here. Everything is pretty overbought. We would expect a correction in this, especially if gold rolls over, then the miners are going to roll over more. And we brought this one up last week. This is GLCC. Victoria asked about this one. And one thing I forgot to mention, when we zoom out on the chart here, this one pays a lot of dividends. And, you know, this looks pretty paltry here if you had got into this, but the dividend yield right now is like 11%. So what we forgot to do was click this little adjust for dividends and watch how the chart changes. So what this will basically do is this will do the math for you, and it'll roll the dividends into the price of the shares, and it doesn't look so bad now, right? Okay, so if we take that same point from 2015, you've made quite a percentage there. That's got to be over 100%. Let's see. Oh yeah, wow, 300%. Okay, now we go for the one that's not adjusted for dividends, and we take that same point, and we're essentially flat, right? We're only up 20%. So, you know, if you guys are using this TC2000, when you have some of those major dividend ones, be sure to plug it in so you can see the true performance. All right, in Franco, Nevada, it's looking like 110 to 112 might kind of be the new support line here. So it shot up. I think our stink bids down here of 104 may be a pipe dream now. But basically our new level of support. So if you're new to the show and you found gold because it's hitting all-time highs, this is probably, other than your physical position, this is probably one of the first ones that you want to get. You want to get the best gold royalty company on the planet that is still super cheap right now. We believe this should be around 125, 130 per share, and it's trading at 114. if you put in some limit orders down here around 110, 112, something like that, that's probably going to be the new floor. Wheat and precious metals shot up with the Fed meeting. Pretty cool. Settled back down. It is above the 50 and the 200 moving average. So you know, we closed our vertical call spreads here in our call. We debated looking for a put, but we really want to see this stuff just in the clouds. Like the RSI is kind of middle of the road at 54, MACD is kind of in the middle of the road. Stochastic is rolling over, but you know, don't really see a put on this or anything. But yeah, we got some major support right here for wheat and precious metals. In our opinion, the second best royalty play on the planet for precious metals. And major support right around here around 44.50. Although if gold rolls over and silver rolls over, especially, then this one's going to go down. Gold Royalty Corporation, this one's doing quite well. We have right here in the daily, we have a golden cross, very bullish sign. I don't particularly see a buy right now just because the technicals are pretty stretched. But for everyone that got into this, you know, back here, we've been talking about this one for probably a year, interviewed the CEO twice. Love this company, believe in it a lot, still a strong hold. Metalla Royalty, this one is coming up on some support right here, right around 280. If gold rolls over big time and copper as well, then this is going to get hit no matter what, but is starting to build some support right here. And see some major support around $2.80. So this is a gold and copper royalty play. Origin Royalties, love this one. It's looking very good. I like this one a lot. Love how the 200-day is angling up. The 50, this is a very, very bullish looking chart. Look at all the moving averages are in sequential order. The 10, 20, 50, 200, 400. Although the technicals are getting really stretched. RSI is 70. Okay, look at the MACD up here, right? Look at the stochastic. Everything's getting super stretched. I don't see any buys right now, but the next level of support is probably around 60 cents or so. That might be okay for a limit order. And Barrick Gold. Barrick Gold. Okay, so we had our run up here since $14. Yeah, next level of support that I would see might be around 15 bucks, would kind of line up back here, and then maybe a stink bid down here in for $14. If gold rolls over, this will get hit as well. It touched the 200-day moving average and then shot down with the bearish reversal bar to the downside. Newmont looks like it's carving out a base right here, right around $33. I think this one's a good deal. You know, if we get a gold bull market like we expect, this stock is probably a double in the next couple of years. Same with Agnico Eagle. Don't see any buys right now. Next major level of support is going to be around $50. So maybe a starter position, if you don't have this one yet, is a limit order around 50 bucks. G Mining Ventures, love this one. Gold developer, found out about it from the RUUU boot camp and from our resident gold and silver expert, Jordan Royburn, and got into this one a little while ago. Looks like it might be ironing out like a cup and handle, although this retraced quite a bit. So I think that pattern's kind of broken. But anyways, looking like it's got a little bit of support here around the 50-day moving average, around $1.40. And where are we? Rio 2. Okay, check this out. This is kind of exciting. So when they got the, when the chinchillas no longer mattered anymore, this thing shot up, you know, within a week or two. And now it's kind of looking like we're ironing out maybe a cup pattern. We'll see how this works out. Would love to see this kind of go up, maybe even a little bit higher, up like 35 cents, and then come down a little bit and then off to the races. I have no idea if that's going to happen. Maybe that's wishful thinking, but go Alex Black. And Syme wants to know about B2 Gold. Okay, we've brought this one up before. This one's kind of interesting. Let's zoom out a little bit here. Okay, so some major support around where it is now. I see a little bit even more support around about 220 or so. That might be nice for a limit order. That lines up perfectly with the COVID crash and a lot of back support back there. If we go out on the weekly here, you could even get, yeah, that's actually what I see. Like 220 looks pretty good. Some bearish things for this is the opposite of what a bullish chart looks like. We have all the moving averages not in sequential order. We got the 10, the 20, the 50, the 400 here, and then the 200 there. So the only way it could look even more bearish is if the 400 was above this. You know, it looks like it might be ironing out a little bit of a double bottom here. But, you know, if you believe in this company and you know it, I think a limit order around 220 would be quite nice. Let's take a look at what this looks like adjusted for dividends. Slightly better, yeah, I think 220 is probably your mark. All right, and moving on to silver. Silver touched up at 26 and then shot right back down. So that level at 26 that we've been talking about for probably a year now, maybe longer, still didn't break through. A little frustrated. Gold is making new all-time highs, and silver just can't get out of bed. But, you know, looking back over history on this, maybe I'll make a video on it, is you can see that, you know, when gold moves, silver tends to move parabolically anywhere from like 6 to 8 months later. But do see some downside here in silver. It's probably going to correct down. Next major level of support is going to be around this 50 and 200 moving average, which would put it about $23.50, a little bit south of a buck of where it is now. And let's see, SILJ. Alrighty, we sold that option from a couple weeks ago. Probably should have held on a little bit longer, but we didn't. If silver rolls over like we think it will, it may give us another opportunity in this. This might actually be a decent put here. Would like to see this kind of angle down just a little bit more, although the RSI is looking pretty good. Would like to see it more up around like in the 70s in the RSI, but beggars can't be choosers. Next level of support for this one is going to be around 915, 920, right along that 200 moving average. Yeah, if silver goes down, this is going to go down parabolically. Pan American Silver. All right, this is going to be one of our beta plays in silver. Like this one a lot. We got two mines that are, at least in our opinion, not priced into the stock. One in Guatemala, another one down in Argentina. Escobal and I'm blanking on the name of the one in Argentina. But anyways, if those mines come online, this stock is going to go up overnight. Next level of support is going to be around 1350, although that is not a real strong level of support. The stronger level is going to be down where it hit the recent lows around 12 bucks. There is some back support where it is now, but if silver goes down, this is just going to blow right through that. And SILV, this is Silvercrest, our little darling. Like this one a lot. They paid off their debt, very leveraged to silver. This is a new junior silver miner. You know, we've been in these since they were developing and just kind of scaling in as time went on. And yeah, if silver rolls over, this one's going to get hit as well. Next level of support is going to be around $5.50. And Gustavo wants to know about Fortuna Silver Mines. Okay, another leveraged way to play silver. This one's got a pretty big market cap. Well, pretty big for a silver company. Got about $1 billion in market cap. Okay, Gustavo, I see the real level of support is going to be, let me back out here on the weekly and we can tell. Oh yeah, look at that. Oh, that'll make a TA guy just smile. Okay, around $2.70 looks pretty good. Do we have a retracement in here? It's close. Not really. Okay, yeah, so basically 270 looks like a great level right here. First level of support is going to be the 200-day moving average, which would be 320 or so. I don't like that the 50 crossed over the 200 right there. That's not bullish by any means. And if silver does roll over like we think it will, it's probably going to blow through this 200. So the levels I would be looking at, if you really believe in this company and you want to get in it, like maybe your first limit order around $3, but the real one's going to be around $2.70. Copper still holding above $4. It's down about 3% for the week. We see the first level of support around $3.80. Then after that, this trend line has just been obeyed since July of 2022. So we're coming up on a couple years of this trend line actually holding some support. And that kind of makes logical sense when you think about it. Entering into a recession, a little less demand for copper, but as time goes on, it should inch higher. I mean, these copper miners are, fuel costs, labor costs, everything have gone up for them. And, the price of the metal that they're pulling out of the ground should track with that. And so far it is. So first level of support around $3.80. And that makes sense. It lines up with the 200-day moving average, but wouldn't be surprised at all if it touches down on this upward channel trend line somewhere around 360, 370, something like that. COPX, our favorite copper ETF, and we've basically just been adding to this thing. When was the first time we bought it? March 10th of 2023. We kind of have a quadruple top right here. So see, once, twice, three, and 4 times, hoping that this punches through. But if copper remains around $4, that's not going to happen. We're going to need copper to move above $4 a pound to break through this quadruple top here. So if copper rolls down like we think it will, this will roll down with it, although exponentially probably twice as much as far as percentage. COPJ, same kind of thing. You don't have quite as clean of a topping pattern like this, although I suppose we could draw in a second grader trend line right here. You can see it, something like that. This one's kind of a 3x to copper itself, and COPX is kind of a 2x. Okay, so probably going to roll over. Might give us another entry into COPX. We'll see. Arizona Metals. Peter Granich and I did a pretty deep dive into Arizona Metals. We'll put a link right up here if you want to check it out. They're going to be doing, they're proposing doing a spinoff of their project, having 2 new companies in there. And so if you're invested in this, I would put that as a must listen. And so check that episode out. All right, and uranium, we are having Justin Hune on the show. Let's see, first week of April. So uranium is up about 4%, shot up to $89.25. Some are reporting $91 a pound. So that was probably the most recent bottom that we saw. And you can pretty easily play this with the SRUUF, the Sprott Physical Uranium Trust. We missed the tick a couple weeks ago down here. We could have got it for 19 bucks. Back here, the discounts were, I think, like 14%, maybe 15%. So heck of a deal. That discount has gone away, and we now have a discount, I believe is 4.59%. No pounds added, but we don't need them. But right now, you could get $22 worth of uranium, and it costs you $21. Not the screaming deal that it was before, but still not bad. All right, and moving on to what's next? Cameco. Cameco, CCJ. Okay, we touched the 200-day moving average week before last, bounced up. I don't see any entries into this right now. But a return to this 200 moving average, I think, is likely. And if it happens, that might create a buy point. That would create a bit of a double bottom right there. Getting a little stretched in the technicals, but that would be an interesting entry point for Cameco. The next level of resistance is going to be this 50 moving average, which is around, what is that, like 44 bucks. Kazatomprom, the biggest uranium miner on the planet, touched the 200-day moving average the week before last for a hot minute. You know, if you were on it in front of your computer screen, you could have caught it. Shot back down after on Friday. And I still see this this general level of support here around $38.50, maybe 38 bucks, 37.50, somewhere in there. So if you want to get into this company, that might be an interesting limit order to do so. I can tell you they pay an amazing dividend, and I hope they never stop. Uranium, what is this? URA. URA touched the 50-day moving average, did not break through. So as far as this chart goes, RSI's middle of the road, MACD's middle of the road, stochastic's a little high. Yeah, kind of looking towards the downside, although if the spot price of uranium moves up, this will blow right through that. But an entry point might be somewhere around here, maybe around $27. That's kind of a major level of support. URNM chart looks almost identical. Level of support looks to be, although we did break above that and we're touching right here, so decent support where we're at now. We thought back here that $50 was kind of the new floor. That got disproven pretty quick, but we're up at almost that point now. If you get it back down around $47, we think that's a deal. And URNJ, we've got some support right around $23, which is where you see the white line. So if this, you know, these charts look pretty similar, right? 50-day moving average, right about where it is now. It touched it, couldn't break through. So we'd expect like a little bit of a pullback here and to touch back down here. If you get it around 23, that looks like a pretty good technical entry. Uranium Royalty Corporation, the option is still on. We placed a little something more in our long-term portfolio, but we got stopped out. But the option's still on and it's good until October, so not worried at all. We expect the spot price of uranium to continue to climb, and then this is a leveraged bet on that. You know, I don't know if I see an entry here. Maybe. I mean, if you want a long-term position, I don't think it's terrible. You know, it's relatively cheap, $2.40, 43 cents. Yeah, I would like to see it move above the 200, kind of like with the reversal bar to the upside. It'll get a little bit more expensive, but you have more information. Uranium Energy Corporation, love this company a lot. Support is around $6.20, $6.30. So if it hits that 50 moving average and comes back down, that might be a nice entry. And Energy Fuels, UUUU. Option, we still got it on, expires in September. This one's working out pretty well. This is also a leveraged bet on uranium, so we really believe that uranium's moving higher, and we placed our money where our mouth is by buying the Sprott Physical Uranium Trust, and then the options on UROY and UUU. And check this one out, SMR. This is NuScale. Man, this one shot into the clouds. Hopefully you guys moved to the point of no concern and sold up. You know, you're never going to catch the exact top, you know, but if you got in down here, see, like I could totally see this as an entry point right here. Let me run a retracement and you can see, let me make this a little bit bigger and there. Okay, so see how we run the retracement, hits once, hits twice, reversal bar to the upside, and then we're off to the races. Okay, so something happened with this as far as news, but if you're looking for a technical entry, that would have been it right there. Or you could have had it back here going up, double bottom, and you're in, right? But when you have charts that run up like this, they're almost never sustained. And, you know, if you're in this for the long run, you probably don't care. But it is kind of nice to move to the point of no concern and basically be in the thing for free, especially in risky ones like this. Oops, there we go. All right, and crude oil, it's down about, well, it's essentially flat for the week. It was up to $83 at one point. Now it's back down to, it's closed the week at $80.63. So we drew this kind of inflection point here, and it's not real scientific. We just got a trend line going down, and then we have a boatload of resistance right around here, around $84. And then we have a lot of support down here around $66. So there's kind of a convergence right here. And I believe this will be an inflection point. Wouldn't surprise me at all if we hit that and move down. If we break through this, I think we're off to the races. The next level of resistance after that will be about $90. So we'll see. The 50 moving average is angling up. The 200 moving average is angling up. All these moving averages, with the exception of the 400, are pointing like to the upside. So that's pretty good. Maybe we'll actually punch through it. We'll see. Technicals are a little stretched up here, but maybe the fundamentals will win out. XLE, we got into this thing, when is it? Oh, exactly a year ago. Okay, so love this one a lot. This is, you know, in a lot of your retirement accounts, they don't allow you to buy specific companies like Exxon or Chevron, but they do allow you to buy a lot of these ETFs. And in our opinion, this is the best oil ETF because the two biggest holdings, Exxon and Chevron, you know, in that order, make up almost half the account. I think it's like 40-something%. So is coming up on some resistance here. We're getting a bit of a triple top right here. Technicals are super stretched. RSI is 74. Look at the MACD. Look at the stochastic, just been in the clouds. They also just paid a dividend, and it's kind of unusual, but it actually went up after the dividend. Usually there's a little bit of a correction, like you can see back here. Yeah, I don't know, but I definitely see more downside risk than upside, although this is a pretty bullish looking chart. And look at that, we're about to have a golden cross here, the 50 moving above the 100 or the 200. And ExxonMobil, love this one, pay pretty decent dividends, 4%. This company is taking a bath in cash. And if you believe in the oil narrative, then this one's probably going to do better than most. So like this one a lot, although I don't see any entries. We want to see this kind of roll over and, you know, come back down to the 200 at least or something, but very bullish looking chart. And Blackstone Minerals up about 1% for the week. Had a little bit of a correction after Tuesday. We got the option on here. It's dated out for almost a year. So we got definitely time on this, but we see this one moving up. And for our friends, the Canucks north of the border, do not buy Blackstone. That you got some tax implications there that are going to be no fun. And but this one, freehold royalties, is probably for you. As far as an entry here, let's see. You got the rising 200-day moving average. That's cool. See how it's just starting to slope up. We got the 50 moving average starting to slope up. So maybe if we get a correction down here around $14, that would hit on the 200-day moving average. And then the real support is down here around, what is that, $13.60. And then you might get lucky down here around $13 for an entry into freehold. And Woodside Energy, maybe a limit order, around $19 or something like that. Place an option here. We were up, I believe it was 25% on the option here on Wednesday. We did not take it, and now we're essentially, although the share price is up slightly, we've had some theta deterioration, and we're about even on this one. So hopefully that one turns around and it moves up. And Petrobras. Okay, so we had some people write in on this. Thank you for doing so. Brian says, PBR has good earnings. The problem is they're threatening to socialize the dividend. I love that wording. There were warnings about this since 2022. They're also trying to invest, in other words, waste $100 billion into renewable energy. Ironic for an oil company. Anthony also says, Petrobras didn't pay the special dividend the market was expecting, and this is how the market responded, by selling off. Even though it was one of the best years that the company ever had, it happened against the wishes of the CEO. So we can ask Rick about this one when we have him on next time. That will be in the middle of April. As far as an entry here, I drew this little support line around $14, and that's probably going to be it. You know, maybe just anywhere around that level for a limit order if you want to get into Petrobras. All right, and natural gas is essentially flat for the week. I think we're going to be grinding out kind of some sideways action here for natural gas. The way we're playing that is Devon and Equitable. This is Devon. Love this company. They pay pretty good dividends, although the technicals are getting really stretched here. RSI at 74. Look at the MACD here. Doesn't look like it's stopping anytime soon. Like that it punched through the 200-day moving average. And if you go out to the hourly here, this kind of looks like the S&P daily chart, right? I mean, just kind of obeying that 10 and 20 moving average. Although, see, on the hourly chart, you can see it, and on the 30-minute, you can see it. See how it's going up, and now it's starting to put in what looks to be like a topping pattern. And see, the technicals are starting to go down in the shorter time frames. So it looks like we might be leveling out here on Devon. We'll see if it's able to hold the 200 moving average. And then Equitable had quite a correction. In hindsight being 2020, it looks like would have had a nice entry on last week, maybe on Wednesday, down here around 33 bucks. We've got a limit order down here in for 32. I don't know if it'll hit or not, but if it does, we'll be grateful for it. But see, the technicals got pretty sold off and then started to turn up. MACD starting to turn up, stochastic starting to turn up. These two companies we like a lot. You know, they're pulling natural gas out of the ground for about, you know, $1.50, $2, something like that. And then for them to ship this overseas, they're selling it for $8 or $9, which is a lot of fun, especially if you own the stock. So like these two companies a lot, and I think this is kind of an easy beta way to play the natural gas sector while it's really cheap. Coal. All right, we are approaching our idiot-proof arrow rate here that we put in after having Matt Warder on the show. I think it's time to slowly start scaling into coal. All right, super excited about this. We've been waiting a while. You know, we had him on the show a while ago. We're having Matt Warder back on again the same week as Justin Hune, the first week of April. And tomorrow we are having Trader Ferg on. So go to the community tab on our YouTube channel, and there is a submit the questions for Trader Ferg in there. He follows uranium, oil, coal, and to a lesser degree precious metals. So put your questions in there. All right, so we're approaching our idiot-proof arrow. This is the time to start paying attention really to thermal coal. And as far as met coal, we still have a little bit more time, but met coal is down 2.5%. And this is exactly what we want to see. We want to see this get down to about the $250 mark, which is what Matt Warder predicted. And we'll probably start aggressively going into this in June. This is our favorite coal ETF, and it's our favorite because it's the only one on the planet. So this is what you got. If you want to play beta and coal, this is how you do it. I think limit orders anywhere around $22 is going to be, you know, decent. We need to have more time go into this so we can see, you know, more money coming into this thing. Although the fund is over 2 million now, so that's about double what it was even just 3 or 4 weeks ago. So that's good. Money is flowing into this, and I think that'll continue to happen. We want to see some kind of pattern here. We're just making little entry positions here. Let's say we want to bet $100 on coal. To put that into perspective, this is $5 and that's $5. And if it gets down to 22, we'll bet $5 again. Okay, so this is going to be a longer term bet over the next 5 years or so. And we want to just slowly start scaling in as this gets cheaper. Glencore looking really good. Closed the week at $10.73. I think a limit order down here around maybe $9.75, something like that, would be a decent entry point. And it's not super scientific. We're just lining up back here with with back support, somewhere around $9.75. There is an argument for putting in a bet here at like, what is that, like 1040, something like that. But I think there's a little bit more support down around like 975. All right, we still got our limit order down in here for 856, and we just got into the weeds by zooming in back here. But you know, we're pretty happy with our position. If we don't add any more, that's fine. But if you're new to coal, or if you're new to Glencore, that would be where I would be looking. And AMR made our first entries into that a couple of weeks ago. We have a limit order down here for 265, which will line up right here with the 200 moving average. So we got in at 350, 325. Would love to see this roll over more. Matt Warder thought that it was going to kind of trade in this range here around April or so. We're approaching that. And so pretty excited for this one. We'll be picking his brain on that, and also Trader Ferg. Bitcoin, a bit of a, maybe we got a triple top here. Animals was saying, could be triple topping. I wouldn't buy the dip. All right, so this is what he's talking about. If you line this up right here, it's not perfect because it's angling up, but you guys can see it. It hit there once back in April 2021, came up and hit it again, November 2021, and then formed this giant cup, and then hit it again here in 2024, you know, just a couple weeks ago. So I would be very curious what happens here. I mean, you guys have been watching me long enough. You can see this giant cup here, not as big as gold's cup, but if this does a pattern, something like that, that would be pretty tough to ignore. We have the halving coming up. I don't know. Interesting. All right, platinum closed the week below 900, down about 4.5% for the week. And as far as support, I would put it somewhere around like 850. That lines up pretty good back here. Now, the way that we can play this super liquid on the stock market would be the fund PPLT, and 850 would put us right around $80 in this fund. So this is basically just a warehouse full of platinum bars sitting on pallets and or shelves. And you know, if you want to play the platinum bet, this is an easy liquid way to do it. Palladium closed below $1,000 as well. Oops, what are we doing there? There we go. Get back to our little pointer. Palladium closed below $1,000 as well, not quite as low as platinum. But as far as an entry point, maybe around 900, 925, something like that. Or you could play it on the PALL, same thing, warehouse full of palladium bars, maybe somewhere around $84, $85 for a limit order. Or the easiest way to play both of them would be the SPPP, the Sprott Physical Platinum and Palladium Trust. Maybe a limit order around $9, something like that, would be a decent entry point. All right, and iron ore, kind of flat for the week, still at 110. And VALE, we have an option on that, although the share price is up slightly from where we bought it. The theta has deteriorated it. After times like this, you wish you would have pushed this out just a little more, maybe to like July or August, but we've got it for June. We'll see how this irons out. If iron ore ticks up, then VALE should do quite well. BHP, we exited our option on there. What was our profit on that? I think it was 30%. Super glad that we got out on Thursday, because on Friday it just shot down. I would have destroyed all of that, but got out of our short-term one on BHP. That was set to expire the beginning of April. So made a little bit of money on the option there and kept our monkey brain busy. Rio Tinto, love this one for their dividends. We had an order hit around $62. We have two limit orders in here, one for 60 and then one for 58.50, just lining up with some past back support back here. Like this one a lot. And then our last one here is Unity Software. Now, I don't know anything about this company, but our trading partner Eric does. He thought there was a lot of fundamentals on this that would support it. And then when Daniel and I looked at the charts here, we saw the same thing as far as the charts. I mean, it hits once there. What is that, like 6 bottoms? And, you know, looking like it's more likely to go up than down. Just starting to iron out in the technicals here. Hopefully this one plays out. And Scotty says, Steve, love your analysis and your charts. Thank you, Scotty. Thanks for always being here. I've been trying unsuccessfully to overlay a long-term chart history for gold, silver, and platinum, hoping you can enlighten me. All right, well, let's take a look here, Scotty. So we'll bring up the gold futures here. And then what we can do is, let me get that out of the way. So I just double click to see only the chart here. I'm going to go up to this plus symbol and I'm going to add silver futures. Now I've already got it. I've typed these in so much they just auto populate, but you type in SI1 exclamation point, put on new price scale, click, and now the orange is going to be silver. And then I want to add another one. I want to add, what'd you say, platinum? Platinum. And so we add PL1 exclamation point, new price scale, click it, and now that's going to be the light blue one. And so if we look on here, this is, let me go to the weekly so it's not quite so noisy. And then I'll go to the monthly, and we can see here that the orange is silver, the blue is platinum, the price scale for platinum is right here, price scale for silver is over here, and the price scale for gold is right here. And if you want to get them all linear, so you don't have this kind of messy bar chart in the background, since we're on gold futures, you simply go up here to where it's at bars and you make it a line. And now this blue line is gold, and you've got platinum and you got silver on a long-term chart. Platinum only going back to 85 here on TradingView, and silver and gold only going back to 75. But you know, that's 50 years or so. That should be pretty good. And you know, you can hide these other moving averages if you want, you know, by clicking them off. But that should get you started, Scotty. Alrighty, well, I hope you guys got something out of that. Thank you for always being here. If you want to sign up for Rick Rule's next boot camp, there is a link in the pinned comment below, and we'll also be going out to Boca Raton for the Rick Rule Symposium. Would love to see you guys out there, meet you face to face. It'll be a lot of fun. Thank you for tuning in. Hit the like and subscribe, and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.